Good afternoon, Outliers. How are y'all doing today? I hope you're having an incredible Thursday. Hope your day is going great. I'll tell you what, if you were long the market today, you'd be probably having a pretty fantastic day because the market is up gangbusters after the Fed announcement, and that's the typical, right? Is that when Fed cuts rates, people pour money into stocks. And look, I don't know if this is going to hold or not. I don't have to know. All I got to do is follow my plan, right? And of course, like I say, I'd have loved to be in this move, but I ain't stressing about it. So how are y'all doing today? Let me catch up on the chat. Michael's here. Wes, good afternoon. Wes, it's really cool to see you, not just on this live stream, but also on Mahesh's live stream. And I would encourage everyone to go check out Mahesh's live stream. That is at 12:30 Central Time, 10:30 West Coast Time, 1:30 East Coast Time. I am not the best at time zones. I can't tell you how many meetings I've shown up to at the wrong time because I got the time zones wrong. Michael's here. Glad you could make it today, my friend. Randy said, do we have a buy on the SPY yet? We'll have to take a look at that in just a moment. Leo, Jean-Louis, Tug, afternoon to you, Dave. All right, so I wanted to start real quick with the video. So this is one of the news channels that I watch religiously. Maybe religiously is probably not the best word to say, but I watch consistently. There's the word. And what's great about them is that they are not funded by big pharma. They're not funded by outside resources. They're their own thing. It's called Breaking Points. I actually found them. They were interviewed on Joe Rogan's podcast a few times, and his name is Sagar. He's actually from Texas. Sagar is more right leaning, and the other girl, her name is Crystal. Her name is Crystal Ball. That actually is real. Yeah, when I first shared this with somebody that I know, they were like, her name's Crystal Ball. I'm not watching anything with the girl named Crystal Ball. And I'm like, all right, you're missing out. Anyway, she's left leaning. So it's really nice. They have that nice back and forth, and they give their both perspectives. So I really like this channel. But Sagar said something earlier, and I only got 3 minutes deep into this, and I was like, ooh, I feel like he hit the nail on the head on the Fed. He hit the nail on the head on the Fed. So I want to watch this real quick with you.
Go to the next part, the economy. There's been some major developments here with the Federal Reserve. Let's go ahead and put this up there on the screen. The Federal Reserve has announced now a half-point rate cut yesterday, lowers interest rates by, quote, 50 basis points. You can think of that as 0.5%. It still is the largest reduction, I believe, since 2008, and is the first time since 2020 that a rate cut has been announced now by the Fed. Really what it is that it's an admission by Jerome Powell that this effort to curb inflation just through interest rates is now over. But it also reveals, I think, frankly, an extraordinary failure on their point, because what ended up happening is that we had effectively supply side inflation that was not entirely fiscally caused. I'm not going to say fiscal policy didn't have any impact on it, but throughout the entire time, recall, we had very, very low unemployment rates. Now we're actually beginning to see those unemployment rates tick up. Inflation, to the extent it has cooled, is largely because, again, of supply side factors. And all they have done really is jack interest rates up so high that it has made the basic attainment of American life, from a car loan to a house loan, incredibly expensive. The ratio now, where prices where they are at all-time highs or near all-time highs for houses, specifically in like the majority of housing markets, compared then to the mortgage, and then when you put that up against what the average income, or even frankly like a decent income, let's say $120,000 per year, you just put a vast majority of housing unavailable to a lot of people. Another really bad thing that happened is that high interest rates at the current time, at least compared to our like relative history, locked a lot of people in who have low interest rates into their houses. So the housing stock took a dive.
That's right.
And so what happened is that the housing supply actually constricted significantly. Then you had borrowing costs significantly go up. Credit card interest balance and all these other things are all-time highs right now. People's savings are very, very low. So I mean, look, I'm happy to see it, I guess. Some people are calling it, election interference and all that. To be honest, like, this is part of the problem, I think, with the so-called like independent Federal Reserve and all that. It is actually quite common to cut interest rates in an election year. You could read into that kind of what you will.
Oh, really? It's like statistics.
Dave Ramsey.
Okay, so we can cut it there. So the points that I took away from that, which I thought were really good, were threefold. Number one, the Fed failed at raising rates, and so therefore cutting rates is the most prudent thing to do, right? So the justification that he gave, which I thought was actually very good, was, look, you've got the haves and the have-nots in the housing market, right? And if this is one of the areas that they were trying to influence by raising rates, it completely failed. So hear me out. I mentioned this yesterday, but let's talk about it, right? Let's say my house was $500,000 when I got into it, and I got a 3.5% mortgage, right? If I wanted to get out of my house today, I could sell it for $1 million. That sounds awesome, right? But then I now have to go buy a new house at rates that are twice as high, right? And then not only that, anybody who's looking to buy my home, right, they are now struggling because they have to pay twice as much on the asset and twice as much on the financing, which makes it extremely unattainable to get into a home that was, 4 years ago worth half the price. And so we're looking at this situation now, and he continues on about how the Fed really failed because people like me, I'm locked in, right? I've got a 3.5% mortgage. Why would I leave? Right? My mortgage would go up probably 5x what I'm paying today to get into a house just like mine. What's my incentive to leave, right? So there was no flood of sellers out on the market because why would there be, right? If I have to sell my home and I'm getting the same home but 5 times as much 5 times as much payment, that doesn't benefit me at all, right? So the thought behind raising rates, hear me out, here's the theory behind it, is if it costs more to buy a home, right? If it costs more in the interest rates to buy a home and you need to sell your home, the only way for you as the seller to have an impact in this situation, to be able to actually find that liquidity, to find a buyer, is to lower your price. Okay. You as the buyer, now let's say I have $1 million, I need to find a buyer at 900,000, right? Otherwise, no one's going to buy it. I need to find a buyer at 800,000. That's the deflationary part of it, okay? So by raising rates, which I can't control, the only thing I can control is the price of my house when I go to sell it. And if I go to sell it, I'm going to have to lower my price because interest rates are high. But there was no housing supply that came because of this. There was no housing value cut because of this, right? So the Fed really did fail in making that policy assumption that this would happen. It didn't work, right? So now the Fed is evaluating other options, right? And right now, they decided we overshot. We need to pull back, and 50 basis points was a big move to pull back. So we'll just have to see how it goes. Jorn, good to see you. Randy says he missed him earlier today, but I'll go back and watch. Sounds like a tripper, he says. And good point, Randy. If I have to buy it now and it costs twice as much, I'm now paying twice as much of my real estate taxes, which super sucks, right? So I don't know what the housing market has looked like. I have heard a lot on the internet that it has slowed down considerably, right? Units being sold have basically plummeted. But I don't know how true that is, right? If you know, I would be really interested to hear. So let's move on and let's go to our market analysis. Clicky. Just a moment. Welcome to the OVTLYR Trading Room. This is smart trading made simple. Save money, read, Chris. Save time, make money, start winning with less risk. And for those of you who don't know me, my name is Christopher Ewell. I've twice been awarded top 100 people in finance, and I do not know how to read, apparently. But I have been successfully trading since 2009. I'm a partner with OVTLYR, and this is my style of trading using OVTLYR, and I call it the golden ticket trading strategy. Now, real quick, the question always is, how does OVTLYR work? It's a 4-step process. Number 1, OVTLYR monitors how investors are reacting to changing market conditions, news, price movements, and the economy. Number 2, OVTLYR determines if investors are acting irrationally fearful or greedy, and by how much. Number 3, OVTLYR gives buy and sell signals when these irrational behaviors reach an extreme. And number 4, that allows you to get into the market, to get into the stock before the OVTLYR move happens. So let's do a quick member highlight and see what's going on our Discord. All right. So in the Discord, we absolutely want you to participate, put your thoughts out there. Let us know what's going on. Max had some really good points, right? One thing that Max had asked, let me go back to it real quick. Yesterday, I think I mentioned that one. No, 11:46 p.m. Okay. Chris's execution plan is very straightforward and proven, yet the perfect setup happens once in a while, and it's not very frequent, and it's not meant to be. So I think the job that needs to be done here is more mental, to hold our money while there is no setups and not to look for other opportunities that might lead to losses. That's a good point, Max. Now, I would really encourage everyone to go to the September 13th trading room episode. We went for a long time having a long discussion about trading psychology, and we got to listen to one of the market wizards describe how important it is to follow the trading psychology. Max also asked a couple things about, hey, for the whole year, it looks like you'd have only traded 84 days. And I was like, well, you can absolutely buy puts, which is what I did a lot of last year. And then earlier this morning, certainly not a member highlight, but something I do want to showcase. Earlier this morning, I'm a data junkie, right? I get my fix on data. I get my fix on the markets. This is my jam. One thing that I like to do actually is I like to look at the stocks that pass for the day, right? And then go through and back test them using the golden ticket trading strategy, right? Use them following the whole plan. And so I just keep my own notes on this. And so I was like, you know what? I think I should share this. So I started sharing the results of that, and I'm going to continue to do that as long as I get a chance to do that in the mornings. No promises. There will be days when I don't have the ability to do that, but every day that I can, I'm going to. But like Zillow, 1.4% on a trade from September 16th, 2020. In fact, let's go to these. We got some time. So the Zillow signal all the way back, September 16th, 2020. Now, I will say, while doing this in today's market and today's data, I don't know if there were order blocks on anything at the time of them happening. So that's the one thing that I can't tell. But what I'm looking for is a handful of things, right? I'm looking for the SPY signal also being in the buy state, the market breadth on that. The market breadth being bullish, the market trend being bullish, and also the sector breadth being bullish as well for that particular stock. So all of this at the same time, right, needs to line up. So for me, it's not very often that happens. So for Zillow, that happened 3 times in 4 years. So the first one happened September 16, 2020, made 1.4% on that in theory, right? Following the same exit criterias, including these. And then fast forward, 2 more happened in 2024. Fast forward. Here we go. And one of these I did trade actually in real life. There was this trade here. It made 3.63%. That was this one here in January. And then we did trade this one in the trading room. Unfortunately, this one didn't work out, right? It went down. It was in July of this year. It went down 5.6%. So then I did the same for Lennar, and then Sprouts Farmers Market, I believe is what that's called. Either way, I wanted to go ahead and start putting this data out there so you guys know, right? I'm not just sitting idly by, right? I'm actively practicing in a way, if you want to think about it, but also keeping data, right? Because I did those from yesterday and today. And this was the results from yesterday. And I'll explain what this means, right? So the expectancy is, in fact, I put a link out there. What is the expectancy ratio? It's a key metric used to measure performance of trading strategies. It gives traders an idea of how much they are likely to make or lose on average per trade. By understanding expectancy ratios, traders can decide which strategies may best suit their goals and risk tolerance. So for me, I love looking at expectancy. If I have a positive expectancy, that's muy bueno, right? So average win is the average of these. Average loss is just the one. At a win rate of all these, 4 out of 5 for winners, right? And then the loss rate was only 20%. So you do the average win times your win rate, and you do your average loss and then you subtract your average loss minus your loss rate, and that gives you your expectancy. That's the math behind it there. So the expectancy on that means, on average, right? If I put on any one of these 5 trades, 1, 2, 3, 4, 5, if I put on any one of these 5 trades, I expected to win 2.63%. Now we're talking, right? And that's on the stock. So of course the options will be very different. And then we could go to today's, which was really cool because Carvana had a 29% move, which was unbelievable, right? And even though I had a 50-50 win rate loss rate, look, my average win was 12%. My average loss was 1%, right? So even at 50-50, which was not the best day, my expectancy was more than twice what it was the day before because I had a humongous winner. Let's go to that real quick so you know what I'm talking about. That was June 6, 2023. Here. Now, it doesn't look like much. It doesn't look like much when you zoomed out, but then you zoom in, and you're like, holy moly, wait a minute here. Wait just a cotton picking minute here, right? That was the day the signal came through. This was the day that my signal actually had the exit, right, on my exit criterias. It's a 29.6% move, 29.7% move in a couple days. And I mean, I could have made even more, right, if for some reason my signals hadn't come through on just that particular day. But good gravy, 29% move in just a couple days. I will gladly take that. So I'll be doing that all the time because I really enjoy doing that. And I hope that I hope you find it useful, right? Because when we do trade, right, we do so to make money. We don't do so for fun. We don't do so for entertainment. We do so with one goal in mind, and that is to come home with more money than we started with. Won't happen on every trade. Not every trade is going to be a winner, but our win rates are super high and our expectancy is super high. So by all means, let's do this thing. In fact, I'll let you in on a little secret. I actually made a big deposit into my account by about a third earlier this week. So I'm serious right now, right? I just increased everything by about a third. Nathan's here. Yorn says, love that, Chris. Just supporting your system even more. Exactly. Sebastian says, hey. So with that all out of the way here, let's continue on. Be sure to share what's on your mind in the Discord. We want to hear what is going on with you and help you out any way we can. Because the first rule of Outlier is you tell everybody about Outlier. And I know you're already subscribed, so do me a favor, hit the like button. All right, so the golden ticket trading strategy starts with the market. We're going to let the market tell us what the 10 over the 20, price over the 50 is a bullish trend. And it certainly is ultra bullish today. Let me go to today. Let me go to today. Still got to go today. There we go. An ultra bullish trend right here. 10 over 20, price over 50. I will let you know, I don't do much in candles. I don't look for candles at all. But I'll tell you, a candle like this is an indecisive candle. A spinning top is what this is called. A doji is what some people call it. It's where the open and the close are right around the same, and it's got a candle, or it's got a wick on both above and below. And these are indecision candles. That doesn't mean that it's going to go down. What it means is that we don't really know which direction it's going to go, right? I'm trying to see if there's any other of these. You could say this was one right here on May 7th. And it did absolutely continue on, right? That doesn't mean anything, which is why I don't put a lot of stock in these. But that would be a doji candle. Wes says, do you have any rules about how many trades to be done at one time? No, dude. If it sets up, I need it. If it sets up, give it to me. That's my rule. If it says up and I don't trade it, I have broken my rules. I'll put it that way. Okay, so we have a bullish trend. Market breadth. Let's zoom in on the SPY's market breadth. We can see here, it did cross back and is now looking bullish. Now, keep in mind, it wasn't all that long ago when I was like, all right, I'm ready to go short, but nothing set up, right? In fact, it was on this candle right here that kept me from going short. And I believe it was Wes mentioned, hey, is that a problem that it closed over the 50? And I said, yeah, that's a huge problem. I'm not going short if it closes over the 50. Look at that. So the trend is up. Market breadth is up. The last thing we need to see is the SPY signal. And it is still in a sell. It is still in a sell. Randy says, I got money. Let's go. It is still in a sell signal as of right now. So I'm waiting patiently. But don't be in a rush right now, right? The price trajectory oscillator, I would like to point out, is this blue line right here. This is probably one of the most valuable pieces of information to get out of the OVTLYR platform. It's not a moving average. Actually, in fact, on our Wednesday meeting, we had a discussion about maybe some enhancements we could make. Mahesh was talking about adding moving averages to the chart and then moving down the price trajectory oscillator to be another lower indicator. And I was like, Mahesh, if you do that, I think we could get some really valuable information out of that. Because I'm already using the heat map, which is a lower indicator, as exit signals. And I'm like, I don't know, dude, I could probably find something pretty useful if you put that in a way that I can read it in a different manner. So that could be coming soon. But the blue line right here is our price trajectory oscillator. When it's moving down, you can expect stocks to move down. When it's moving up, you can expect prices to move up, right? And right now it's sideways. I don't know where it's going. We got a sell signal. We got a sideways oscillator. We got a heat map in the G15 value. So not too super deep, greedy. Do want to look real quick. Yesterday was G15. Today's also G15 on the SPY. What does that tell me? I want someone in the chat to tell me what I'm thinking, because I've already explained this to you. You know this. If it was G15 on the heat map yesterday and it's G15 on the heat map today, what does that tell me? And I will wait. Randy or Max says, very useful, Chris. Thanks. You're welcome, my friend. I will wait. This is 30% of your final grade. You are required to participate. First correct answer gets a gold star. Hey, like that. I'm going to wait. Market has to make a decision. That's a good answer, Randy. I'm going to wait. Not the answer I'm looking for, but I'm going to wait. Oh, look at that. Oh. I just saw something even more. We've got G15 starting on September 13th. Still G15, still G15, still G15, still G15. Michael says, what was the question? Leo, get out. Randy, stalled out. Wes says, I remember you saying install the heat map, so you're not taking a buy. Donna says, exit signal. Jean-Louis says, exit signal. You're all right, with one tiny caveat here. If it's no longer getting more green, that means it's no longer getting more greedy. Okay? If the market, if this stock, if any stock, is no longer getting greedier, then I don't want to buy it. I don't want to be in it, right? Because I only want to be in a stock where the greed is ramping up, right? When people are getting more and more and more greedy. If greed levels out, which as I talked about earlier, that's one of the key features on how OVTLYR works. If greed levels out, what would you expect to happen? More fear coming into the market, right? So if the greed has leveled out for several days now, I don't know. We could see a one-day move up and then potentially move down. And I think that there is legs for a move down, because we've got the heat map has stalled out for several days now. We have a sell signal. Our trajectory oscillator is not moving up, but more moving sideways. So for me, I don't know. It's a little hairy. Hey Cam, glad you're here. Okay. Let's move on. So I won't be taking any trades today. Yesterday we talked about exit signals. So good job on everybody remembering exit signals. Let's talk about the screener. So this is a new thing that we have here at OVTLYR. And it is awesome, right? It is so cool to be able to, I mean, it does everything that I was doing before, but in the click of one button, right? It does everything that I wanted it to do that I was doing manually, but in the click of one button. So that is one of the reasons why OVTLYR is so awesome, is because we real traders are actually really using it every day and trying to find ways to improve upon it. In fact, Mahesh's idea of adding moving averages to it was because Mahesh is using it and he's trading it. And he's like, you know what? It really would be a little easier if we had moving averages on here. And I was like, yeah, I know. And order blocks might be in the future. I can't make any promises on that. But I know that both he and Mark were very interested in seeing if they could incorporate order blocks into the platform. So maybe that enhancement will come one day. I would love to see that because, as you know, order blocks are a huge part of how I trade. Cam says, my 30 deltas blow up today. I love days like this in both the SPX and IndieX. Cam, I'm glad it's working out for you, my friend. All right, let's go to the screener and let's talk about how freaking sick it is. Okay. So this is what I use here. Positive backtest, over 1 million average daily volume, a buy signal, oscillator moving up. That was just what I was talking about, the blue line. All the market caps, like I don't care about market caps. I like to see over $20, right? You don't have to do that. I am a snob. I want my stocks to be expensive. So I want them over $20 at least. The heat map, I do have some limits on this. I want all the R's. I want anything that's moving out of fear into greed. Okay. And then green, I only want up to G40, right? Because if it goes over 40, it's already really far out there. In fact, I mentioned this just a couple days ago. You got to take a look at it from a perspective of how much greedier can we get here? If we're already at 40 out of 50, we're like 80% of the way there. I don't know how much further that can go. So I'm not even going to risk it. So let's build this together. So you would go over here to the screener, you click this button, and let's reset the filter. Oh, click the wrong button there. Reset the filter. So like I say, I like all the sectors. Doesn't matter to me. If you wanted to eliminate and only look at certain sectors, you can. Let's say, for example, you want to look at financials and you want to look at banks, right? You can filter everything else out and only look at financials and banks. But I like to do it all wide open. OVTLYR signal return. The positive is this number here. So you get a performance summary and it's this value right here. How is the OVTLYR results, right? If they have positive expectancy, we talked about expectancy earlier today, that's what I want to see. So I only want positive signal returns. Capital efficiency. Capital efficiency is this metric here. The way to describe this is it's a measure of how long you're in the market versus how well it has performed. Let's see. Let me see if I can find an example real quick, like right at 2.0, so I can do the math for you. .0 works. CWH. Let me show you what capital efficiency means. It's a measure of how well you're performing in the market versus how long you're performing. It's a negative. I don't want that. Oh, it's because we haven't done our filters yet. Hang on. 2.14. We'll work with that one. Okay. EVR. John Lee says that would be a game changer. Absolutely. Randy says order blocks would be awesome. I agree. All right. So this one here has a 206% return in OVTLYR. Pretty freaking sweet. I love that, right? Capital efficiency is 2.14x. What does that mean? So first off, take a look here. Up in the corner, you can see buy and hold. We've been in it for 1,186 days versus OVTLYR signals would have had you in it for 480 days. There were 25 buy signals during that time. Average holding period only 19 days. So you were only in the market 40% of the time versus being, 100% in buy and hold. Okay. So here's where we start to get the capital efficiency. If I'm only in it for 40% of the time, yet my returns are outstanding, 206%. Buy and hold is at 238. Okay, I'm only in it 40% of the time, but the returns are nearly identical to this, right? So if I'm only in it 40% of the time. Yeah, I'm trying to think about how I'm going to do the math here. I'm only in the market 40% of the time, okay? We got 203 on our returns, and it was 238 in buy and hold, okay? So that is 85% of it, okay? So if I do the math correctly, and it's going to take me a couple times. I want to make sure I get the math correctly. This divided by this. I did it right the first time. What's up? So that 2.14x, right? We got 85% of the returns, yet we were only in the stock 40% of the time. So that means our capital was working twice as hard. Does that make sense? Right? Do you understand the math behind what the capital efficiency is? We got nearly the same returns, but we were only in 40% of the time. So our capital is working twice as hard, which is pretty cool. And it says that capital could be used somewhere else. Nice. Exactly. Let me know if you have a question on what capital efficiency is. Right? Because we're measuring how well you are performing relative to the stock itself, relative to how long you're in the stock. All right. So moving on, that is one of the things you can add to the capital efficiency. Above 2, 1 to 2, or less than 1, I just leave it wide open. 30-day average volume, pretty obvious. I like over $1 million. I want liquidity. Current signal status, buy or sell. Well, daggum, if I'm buying stocks, I only want to look at buys. Price change. This is something Mahesh likes. I don't use it, but he does. So let's say over the last 1 month, I want a correction of 5%, 10%, or 20%, right? Maybe for you, that's the way you like to invest. You want to see something with the correction first and then it pull back. Whereas I personally, this is my personal preference, I like to see a stock that's already strong and getting stronger versus a stock that was weak and is now getting stronger. So that's why I just leave that wide open. No selection there. Oscillator. That's the blue line we talked about a minute ago. Right? That's the price trajectory oscillator right there. So I want to see that moving up. Market cap, I leave it wide open. I don't really care. But maybe you trade small caps and you can do up to 5 billion. Totally up to you. Price range, you can be a snob like me and say minimum 20 and leave your maximum wide open, or you can leave it wide open and it'll give it you everything. Or let's say you only want to trade anything under $5, right? There you go. Then you can come to the heat map values. We talked a minute ago about what the heat map values represent, the fear and the greed. So if I'm going long, I want all the R's. I want most of the G's up to G40. Leave it like that. And then the overlay indicator. That's these backgrounds here. Green is an uptrend overlay. Red is a downtrend overlay. White is a sideways overlay. So I would add just uptrend. Then I'd hit apply filter. Then after I do that, these, in my opinion, are the creamiest of the cream of the crop. These are the ones that I want to trade, right? And then you can say, awesome, I want to save this. I'm going to save this as Randy's very best screener of all time. There you go. Randy, that's your very best screener of all time. Then you come over here to your screeners and you're like, oh, you know what? I don't want to use Randy's very best screener of all time. I want to use OVTLYR bullish. That's what I named mine. I hit apply, and then it'll put all of mine onto there. And I mean, you could have different ones, right? You could, I mean, you could have ones for being bearish, which I've got here. You could have ones for bullish. You could have ones for maybe earnings. You know, if that's something you want to look for, there's all kinds of stuff that you could put your screeners on. And then I just do the same thing for ETFs. When you build your ETF scanner, your screener, you can save it over here, and it saves as a different name, right? You don't see Randy's very best screener of all time right here. You see my ETF ones that I built, and basically same thing. The only thing that I do different is I just want actually, let me do this. OVTLYR bullish, apply. I just want the State Street Global Advisors ETFs. That's the ones you're familiar with. XLB, XLF, XLI, XLY, all those guys, right? And then there's a few others thrown in there too, like KRE, KBE. Those are regional banking. XBI is biotech. So that is exactly what I do, as I did on these stocks for ETFs, with the exception of I want this ETF. Does that make sense? Anybody have any questions? Carvana, baby, driving me to the bank. Michael, I don't know if you know my Carvana story. I used to have a Mini Cooper, and one day before I got my Tesla, and I'd been wanting a Tesla for ages, but I didn't have an excuse to get it because my Mini Cooper drove great. I loved that Mini Cooper. I drove the mess out of that car. It was so much fun. And one day I walk out in the garage, and all the fluids that were in the Mini Cooper were on the floor of the garage. They were all out of the Mini Cooper. And I was like, ooh, okay. Probably need to get that fixed. So I took it to a Mini Cooper repair place right up the road from me, and they only work on Mini Coopers. Like, that's their specialty. And if you're a Mini Cooper guy, you'd know. They give me this estimate, and it's $4,400 to fix it. And I'm like, just slap it together. I'm done with this car. Just put it together where I can drive it over to Carvana and sell it to them. So $500 got me out the door, drove it over to Carvana, and they gave me like $3,200. So clearly it was a total mechanical failure, a total mechanical total loss, right? So I was really happy that Carvana gave me any money in that case. And then I went and bought my Tesla. So it was worth it. Randy says, that's me. And maybe one day we'll be able to share these scanners around. But that's how you build the scanner. So I just want to take a few minutes today to talk about how we build the screeners, how we build, you'll hear me call it scanners and screeners interchangeably, but that's what this is for. A little bit of education on how to run these, because in the very near future, we're going to be running trades, and we won't have time for these kind of lessons. So I hope that this is super useful for you. Hey, Joel asked a question. Do you ever use performance summary other than the max? Let's go to that real quick. Performance. Oh, okay. I'm really glad you asked that. Let's go to Carvana, since that's the stock of the day. This is something early on in OVTLYR I picked up on, and I was like, guys, we need to work around this, Mark and Mahesh, because if you go to the 3-month, right? Let's say, for example, if you go to the 3-month in Carvana, there's one opening, one closing. There's one closing from something outside the 3 months. So it's only going to register one trade. Okay. Then if you go to the performance summary, right? OVTLYR did great. Buy and hold did great, but it only had 2 buy signals. The one that came today and the one previously, right? So if you look at that, that's going to give you drastically different results. If you look at it just at the 3-month time frame, you are not going to have all the details you need, right? Because you only have 2 buy signals and only one of them has completed. If you go to 6-month, it will change. It is dynamic, which is great, right? These returns are awesome. But then again, you're only looking at 4 buy signals. That's not enough for a lot of data here. So I always go to the max. Always go to the max, because that's going to give you the most amount of data you could ever want, right? Look at how different of a story this is, right? When you include all the data, OVTLYR is at 70%, buy and hold at 2. Buy signals, 15 signals, right? Think of it this way. If you are evaluating anything in statistics, you want as many data points as you can. You can't do any sort of statistical analysis with 2 data points. 15, that's, 7.5 times better than 2. But of course, we want even more. So this is growing as we get more data. But you, in my opinion, always want to start on the max view, because that's the default. And that's how we got there. I was like, guys, we need to default to max, because then you can zoom in and get everything you need, right? Versus just hitting one of these time views, and that totally throws off your stats. And I don't want you to ever be swayed by the stats that aren't, conclusive. I don't want you to be swayed by, the performance of 1 signal versus the performance of 15 signals, right? A lot more reliable when you have more data. So thank you all so much for coming. We covered a ton today. I'm really glad that we are doing this every day, right? My objective here, especially while we're not trading, is to make sure that you have all the equipment you need so that when we do start trading, we're going to kick some ass and it's going to be awesome. You're going to be so stoked about this, right? But before we go real quick, clicky. There we go. Thank you so much for being an outlier. I want you to know that we literally couldn't do this without you. And we want to pay you back every single day by helping you save time, make money, start winning with less risk. Tug says, where'd it go? Tug says, great to know. Perfect. Dave says, thank you as always. Great info. Jean Louis says, great job, Chris. Thank you, guys. Don't forget real quick, if you haven't already gotten your annual pass, the price is going up next week. It's literally 82 cents a day right now. So be sure you go get your annual pass before the price goes up. And do me a favor, hit that like button, right? The first rule of Outlier, you should tell everyone about Outlier. And you do that by right now hitting that like button. Thanks so much, Wes. You are very welcome for LA Education. I'm here every single day. I hope you are coming back here tomorrow, and we will talk soon. Have a great day.